Hi, everyone, and thanks for joining us for Fundera's live Q&A session on Paycheck Protection Program loans. I'm Shannon Smith, part of Fundera's webinar team, and I'm hosting today's webinar alongside Fundera's PPP loan forgiveness expert and Senior Director of Finance, Justin Ridgely. As a quick update, we will be switching these weekly sessions to be once a week for 45 minutes in order to better address your questions, so please do keep an eye out for an email about the new dates. We do these sessions in order to get your questions answered, so please remember to submit questions ahead of time using the Google form we'll email you later today. If you have any questions during the webinar, please submit them live using the Zoom Q&A box. If there are any questions we don't get to during today's webinar, we'll include them in the upcoming session next week. If you have any questions in the meantime, please feel free to reach out to our team on Twitter or email support@fundera.com. Lastly, I do want to remind you that we'll send the slides, recording, and any additional resources in our webinar follow-up email today. With that said, I'm going to hand it over to Justin Ridgely, Fundera's PPP loan forgiveness expert, who will walk through any new information about the program before we get into the Q&A.
Thank you, Shannon. So we have a singular big update today. And that's that we were able to, finally from the SBA, an updated PPP loan forgiveness application on Tuesday evening. What they did is they created not only a normal PPP application, which is an updated version of what they released before, but they also released an easy version of this form, which is slightly less complicated. However, when you actually look at them, they're not that much different, but I do think that the easy form will be slightly better, especially for self-employed people whose applications are fairly easy. So I'm not going to go yet, I'm not going to go over these word for word, but there were some notable things that were included here. I think there were some clarifications. I'm just going to hit a couple other slides real quick and talk about a few things just to kind of bring it all back for everybody now that we have some confirmation. Again, this is still what the first page of it looks like. We have all the links in our documentation here. They did separate out the form itself from the instructions for the regular application. This was all one form before. It was 11 pages. Now these combined add up to 12 pages actually. So didn't get any simpler except for this easy app, which is a bit shorter. So main thing is they kind of, they codified this 24-week period. They basically said, again, you can pick either 8 or 24 and use that as the basis for everything. You can use this covered period or the alternative payroll covered period, depending on when you want to start your loan or start your covered period, excuse me. Either the day you received your loan or the first day of your next payroll period after, if you use, twice a month payroll or more frequent. One thing that was, was defined a little bit better in this version is this section here where I'll point where, let's see, where did I put this? Oh, they said the paid costs are defined as paid on the day that paychecks are distributed or the borrower originates an ACH credit. I think for credit card expenses or things you pay with a credit card, like maybe a utilities bill, that would also suffice, but they didn't get into that specifically. Excuse me, just had to take a sip of water. Okay, so nothing else really here has changed in terms of how this fits into the period. One thing that's the most important change, I think, that we've covered a lot on this call, and sorry for an extremely wordy slide here, but there was a question of, with the new 24-week period, what happens for self-employed individuals if, how much can they pay themselves? Previously with the 8-week period, you were capped at either the lower of, an 8-week equivalent of what you earned in 2019, if that was under 100,000. And if you earned over 100,000 in 2019, you were capped at the equivalent of 8 weeks at 100,000 annual. That amount was $15,385. So people were like, okay, if my loan was 2.5 times that, or my pay, then how can I pay myself the equivalent? It doesn't quite make sense. So what the SBA did here is they put in this section specifically here about this new number, which is $20,833. So essentially what this says is if you're a self-employed, you're always going to fall into this 100,000 cap. So they recognize that, okay, you might not have other expenses that you can get reimbursed for, like utilities or other things, and that most self-employed people, especially people who are single person, businesses, are going to be, using this 100% on payroll. So they said, okay, granted that the 2.5 times average monthly payroll is what the loan was based off of, let's do, you're allowed to use 2.5 times the monthly equivalent of $100,000 as your maximum, for forgiveness. So what that means essentially is that you can use this 2.5 month concept, which is over it's like a 10.8 week period essentially, to kind of get your maximum, whether that's or either, if you made less than 100, you can use the 2.5 month equivalent. If you made over 100, then you can just use 2833. So this should make it easier for self-employed individuals or owner operators to receive kind of the maximum forgiveness on their loan amounts. For businesses who have more employees, they extended this concept of this 100,000 basically just to include 24 weeks instead of 8. So the max that any individual could be that you could pay any single individual that would be included in forgivable payroll costs is now 46,000, recognizing that this is a longer period here, and that so this 15 went to this 46. So that was a pretty big change here, and it was good to see that this is done. It essentially means that if you're a single person, you can expense or get forgiven your entire loan balance, for as a self-employed individual without having to worry about the difference between this number and this number. All right, going forward, these categories stayed the same. There was no, no increased guidance here. Same here as well. This is another illustrative thing. One other thing I want to note is, let's see where, okay, Safe Harbor 1. The SBA added an additional safe harbor that was hinted at in the PPP Flexibility Act. And so this is a direct quote. This says, in summarized, it says, if your business, maybe we had a physical location like a restaurant or something else, I use restaurant a lot of examples because it's easy to kind of comprehend, but if you had a restaurant that wasn't able to be opened due to, CDC guidance, which was used by the states, or, you had to open up at 50% capacity, and you are not able to get to their standard, they say, is the same level of business activity as you were between February 15, or as you were before February 15. Business activity, can be taken a number of different ways. I would interpret that as revenue, as mainly, I guess, if you used to seat 500, do 500 dining, like at dinner for a restaurant in a night, and you now have to do 250 due to 50% capacity, I'd say that's a reduction in business activity. So I think this will give a lot of businesses who operate physical locations and rely on those for sales a way out of this reduction in FTEs or salary. So I think this is a good expansion of this, and will allow more businesses to not trip this concept of getting penalized for FTEs. Otherwise, the second safe harbor still applies, and this is kind of detailed out in this application as well. So with that, Shannon, I think we can go to Q&A. I know we had some stuff that was around actually applying for PPP, and then I can hit that first, and then we can jump back to forgiveness.
Great, thanks Justin for covering all of that. So we'll start off with some questions about applying for PPP. This person just would like clarification on how they can use Fundera to apply.
Sure. So Fundera, we've worked with multiple lenders throughout this PPP, application process, and at times, depending on who's going, who's open for business, some lenders have closed down for short periods of time. We've routed through our application at fundera.com/PPP to different lenders. For a while we were primarily routing people to a lender called Bluevine because they were operating the fastest, and we thought that that was the best way to do it, especially here in June. Now, I would advise people, if you still don't have a PPP, we're working with a couple of different banks, and we will actually help process your application ourselves as opposed to routing you to, one of our lenders we work with so you can fill the application out on their site. So I would encourage everyone who's listening, who has not, successfully gotten a PPP loan, to go to fundera.com/PPP. You can start filling out the application, and then, one of our customer service representatives will kind of, reach out to you to help you fill that out and help you get the information into the application you need to get funded. Because we are seeing some lenders start to already shut down ahead of June 30th. So I would advise anyone listening to kind of try to get that application in by the end of this week.
Great, thanks for clarifying that. Next up, we have a question from someone who is applying currently, but they are stuck on the application because of the lack of a W-3 form, and they would like some guidance. They are a 1099 worker with a sole proprietor LLC, so they don't have a W-3 and don't have any W-2 employees.
Yeah, I think this gets to someone who was on the Blue Vine, which is one of our lenders' application. I think that's definitely just an error. I don't think you should have to input a W-3 there, so you can try to get through without it somehow. I don't know how you could click through that, but otherwise you can come back to fundera.com/PPP and you won't get routed back to Blue Vine. You'll get routed straight to our internal application where we can kind of work with you more to get you funded with a different lender.
Great. Next up, we're going to switch over to some forgiveness questions from people that have submitted these questions ahead of time. So our first question is from a participant who asks, if my employee goes on state-paid disability pregnancy leave and I want to hold her job rather than rehire, does this affect my qualifying for forgiveness since the number of employees is less?
It could, unless you hire her back by the end of the time that you either apply for forgiveness or December 31st. One other thing we did here in this application was that if your 24 weeks ends in October and you want to make sure you don't get penalized for FTEs, so you want to get back to the same level you had prior to February 15th, that date is either set at the date you apply or at 12/31. So the 12/31, say your forgiveness period ends in October and you wait till January to apply and you've now had extra time to get your employee levels back up, 12/31 will impact you. But if you apply before 12/31, essentially you're certifying that you've gotten that number up, at the end of that, at your application date, and that's the date you take. So what that means for this person is if, they've kind of want to hold this job, but they can hire this person back before either they apply or 12/31, then they won't be penalized for that person not being on the payroll, provided that there are no other FTE reductions. If there are other FTE reductions, then you're not going to get to this 100% safe harbor, and you will probably have to factor her not being on staff into the average calculation, which will somewhat penalize you.
We do have a follow-up question about hiring employees. This person has just submitted this question, and they ask, if I hire 2 part-time employees, can that be considered as 1 full-time employee?
Yes, it can. There are 2 ways to count that you can opt to count full-time versus part-time employees for FTE counting. A full-time equivalent is deemed to be someone who works 40 hours, and essentially they count as 1. If you hire for part-time, you can either count however many hours they work out of 40. So, 30 hours in a week makes it 0.75, so on and so forth. 20 hours is 0.5, or you can just say anyone less than full-time counts as 0.5. Now, why this, it doesn't really matter which you do. I would suggest people do the 0.5 is because you're doing it in both the reference period you're comparing against and the current period. So there are ways you could maybe game the system, but it's easy just to count part-time as 0.5, and that's allowed, and then kind of run full-time as 1.
Next, we have a question from someone who asks, when I first received PPP, I was virtually overpaying fewer employees in order to maintain FTE of 2.5 and pay out within the 8-week period. Now that payback is a 24-week period, my FTE will now dip below 2.5. Is this a problem?
So that is an unfortunate situation because that's an example of an employer trying to do the right thing for their employees and following the 8-week guidelines, and the SBA and Treasury dragged their feet on getting this deadline, extended, or I guess Congress as well. I can blame for this too. And so now this person has a couple options. One, if you do take the 24-week period and you do reduce employees, most likely, you will be penalized for that. What I would suggest is, the 8 or 24-week period can work a couple different ways. I would suggest maybe this person, since they've already spent the money and we're planning on 8-week period, just apply for the 8-week period. Then you wouldn't be penalized under your forgiveness, and you can still use that convention even though there is this additional, convention of 24 weeks introduced. That being said, you could use the 24-week period and just apply in your 9th week. There's nothing prohibiting you from, applying earlier and say cutting off your period essentially, which is what I was mentioning before. If you were able to keep your employees at their full level, in your 9th week, you apply then, and then you have to unfortunately reduce in your 12th week, you wouldn't be penalized for that. So I would encourage this person to kind of either apply in the 8-week period or apply soon thereafter and use a shortened 24-week period.
Great, and we do have another question just about timeline that this person would like some clarification. They said that they received a loan from a bank they use for their business account early on when the coverage period was 8 weeks. And now they would like to know whether their bank gets to decide if they are bound to that period, or they can just assume that they will be granted the new coverage time period of 24 weeks. They asked this because their loan documents do reference 8 weeks with an ending period in July.
Yeah, so I wouldn't worry about it being in the loan documents. You are definitely eligible for a 24-week period, whether your loan documents say 8 weeks or not. The bank, can't stipulate one way or the other to you, and it's your choice. Very clear in the SBA documentation as to which period you want to use. Either is okay.
Great. We have a question from a participant who asks, under the original PPP forgiveness criteria, when it was only 8 weeks, I only had to prove paid state and local taxes for 1 quarter. Now, with the 24-month requirement, do we have to pay double the tax on the same amount of loan and provide proof of paid taxes on PPP for both quarters?
I'm not sure I totally follow the question or the intent of the question. I think, if you are seeking to get employer paid state and local taxes like state unemployment tax included in your forgiveness amount, then you can use however much you want of that towards your forgiveness calculation. If you're paying that in 2 quarters, then theoretically, you could include that both quarters in this forgiveness amount, but it shouldn't be any penalty to the business owner more than they already are penalized by having to pay the government these taxes. If anything, this could potentially help you get forgiven for your whole loan, because these can be included in payroll costs. So I'm not sure, I don't totally maybe understand the intent of the question, but I think that's the best answer I've got.
Thanks. Next up, we have some questions about documentation. This first one is about whether borrowers can submit payroll documents or whether they have to be directly from payroll company. If they are allowed to submit payroll documents directly, what documents count as proof and are accepted for forgiveness?
So I was just on a call right before this webinar with a group of bank associations, banks themselves, Wells Fargo, Citi, Capital One, others, plus a lot of payroll companies like Gusto, ADP, and others. And this is a big topic of discussion. And basically, one thing is a lot of companies, used Form 941 quarterly payroll forms. That form's actually being changed, and no one will really have these available even until July. So that's one wrinkle. Anyone who used annual documents like a Form 940 or other payroll documents, those won't be available because it's not the end of the year unless you wait till January to apply. And so there's going to be, the consensus was there's going to be a huge reliance on these payroll providers to be able to create reports that exactly will calculate your FTEs, your forgiveness amount over your exact specific period of your 24-week or 8-week covered period. So if you have it, use an external payroll provider like a Paychex, an ADP, Augusto, TriNet, then I would heavily lean on them to help you, generate the right form, and they should have software to do that. We get into a lot of these webinars, what happens to people who don't use those providers. They obviously cost money if you're a very small business, especially self-employed. Maybe, you pay things more manually. And that was a huge question, even in this discussion amongst all these, various, stakeholders, is what is going to be acceptable to prove payroll? And, it's going to be difficult. There's, I think arm's length and third party are words I've used before to describe this. To the extent that you can show how you've paid yourself as a self-employed individual through either a check to yourself, a transferring from one account to another, or generating some sort of QuickBooks or Xero report from your accounting system that records the entries. I think any way you can do to show records of your payroll if you don't use a payroll provider will be crucial, but we still don't know exactly what form that's going to be. And I know the SBA is being asked to clarify that by numerous lobbying groups, the banks, et cetera. We hope to hear more about that soon. But again, lean on payroll provider if you have one. Otherwise, tax forms that are available, and then documentation after that can become a lot more varied.
Great. This next question is from someone who's looking to get clarification on which payroll costs are eligible for forgiveness.
Sure.
So they want to check about health insurance benefits, retirement costs, but also about other fringe benefits that comes in payroll, such as FICA tax subjected ones or other ones that are exempt.
Yeah, okay. So what is included is cash comp, which includes, tips, hourly wages, salary, commissions for sales, vacation, sick leave, severance pay, bonuses, hazard pay. That's all included. Each individual is capped at $100,000 there annually, which is this 46,000 number, or a 20,833 for self-employed. Also included is employer contributions to employee health care plans, employer contributions to retirement plans, and state and local taxes paid by the employer, typically state unemployment. What's not included are federal payroll tax or income taxes like FICA or Social Security tax, OASDI, or Medicare tax that is just deducted from the employee's paychecks. That is included in the gross compensation here, the gross wages essentially, because that comes before those deductions are made. So you can't include those specifically. They're already included in this gross number. One thing I want to clarify is that in the current application, it was clarified that any self-employed persons or businesses contributions, especially for like an S corp to their own health insurance or their own retirement contributions, are not allowed to be included in this. It has to be paid into an employer plan, either whether that's health insurance or for retirement contributions.
Great. And I believe you've already touched on this, but it would be good to revisit just for this person to get clarification. This person says that they applied and received funds based on the 2 FTE and 3 PT employees. After the 8-week period, if they have no employee changes and have spent 100% of the funds on payroll, will they be forgiven for the whole amount received?
Yes, if you've had, if you were using this under an 8-week schedule, which is completely reasonable given that this guidance only came out, nearing the end of a lot of people's 8-week period, and you've spent the money on 100% forgivable expenses, and you haven't changed your FTEs, and you haven't dropped their salaries greater than 25% or their hourly wage rates, then I would go ahead and apply for forgiveness, in July, which I think is the first time you'll be allowed to really, and then get this done, get this forgiven, and then be on your way. I think, if you can better use these over 24 weeks, then by all means, but you're more than welcome to use an 8-week period. And if you've done the right, you plan for that and you've used all your funds and you've maintained your FTEs, then there's no reason to wait longer to get that forgiveness decision.
This next question is about transportation. The cost, this person wants to know if they give an employee a car for commute, will that come as a benefit cost?
If they give an employee a car for their commute, I imagine that would fall under utility costs, which is the transportation part, not a benefit. I'm not, again, the transportation is one that there's no guidance on besides just quote unquote transportation. I think that seems reasonable. I think if they're paying, the employee, the car payment or the lease on that, then that would probably be included in utilities transportation, yes.
Great, thanks for going over that. We do have another question from someone who's self-employed, and they just want clarification on how much they're eligible for forgiveness and how many weeks of pay they could potentially get covered.
So you're eligible for 2.5 times an average monthly payroll, either from, which is either for, what you made in 2019, or you could use the latest 12 months concept and look at like the last 12 months, just calendar months. But you're eligible for 2.5 times your average month. So say if you earned, 25, or I guess, let's say, that comes out to like 25,000 or something like that, then basically that's what you can get, and what you can get forgiven is 20,833, which is essentially 10.8 weeks worth of pay, because you run into that $100,000 cap. So essentially, you need to determine your average monthly payroll and which period you want to use, and I'll get you your loan amount, and you should be able to get the whole thing forgiven since you're going to be capped on that 100K anyway.
Great. We do have time for one last question, which I will take because this person asks if we can share the slide deck. Yes, we can. We'll be sending out a follow-up email today with the recording, the slides, and additional resources to our blog. For any questions we didn't get to today, we'll be sure to record them and use them for the next session next week. As a reminder, though, you can always reach out to our team at on Twitter, go Fundera, or email support@fundera.com. And as a reminder, again, we will send the recording, slides, and the submission form for any additional questions you have in the meantime for next week. Thank you again to everyone for joining us today, and we hope to see you again next week.